Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about the major crash that is going on right now, bringing Bitcoin below $100,000. As you guys know, ever since October the 13th, the Monday following the 10/10 crash, we have predicted that Bitcoin would drop all the way back down to $94,000 to $100,000. And just to go ahead and show you that, I wanted to show you a clip from a video that came out on this channel on October the 24th. I've been saying the exact same thing for 2.5 weeks now, ever since the 10/10 crash. I'm gonna say it again. And people say, yeah, flip-flopping. You're not understanding everything I'm saying. If Bitcoin does not manage to get above $116,000 to $118,000, then Bitcoin will most likely correct to between $94,000 to $100,000. This is the exact same thing that we have been saying on this channel for the last month, and it is of no surprise to those of us who have been analyzing the chart that Bitcoin is below $100,000. So today, we're going to be analyzing whether or not this drop is going to continue. I am of the opinion that it probably will. So let's get started. On the daily chart, you can see that Bitcoin has been going through a large correction ever since October the 6th when we hit all-time high at $126,000. This is now the third major market crash that we have seen so far this bull cycle. Typically, bull market corrections are between 27 and 32% deep. Also, typically, our bull market corrections will drop us back down to one of two levels. Either one, they will retrace us back down to the 0.618, which is exactly what happened back here in the April crash, which is why we were able to call $75,000 as the bottom and why I invested about $100,000 into Bitcoin at this point in time. Typically, the market will either drop back down to the 0.618 and fill a big even level of support such as 75,000, or what we saw in this cycle was that Bitcoin did not drop back down to the 0.618, but instead it grinded sideways for 8 months, and we only dropped back down to the 0.382. What we've seen is that the longest correction in a sideways correction on Bitcoin, where we don't really drop so much in price, but we basically just trade sideways, was 6 months. The deepest correction we've seen, where Bitcoin didn't really grind sideways, but it actually just went into free fall, we dropped 32%. So far, this correction that we are witnessing on Bitcoin, especially back around this blue line, when we said that we were going down to $94,000 to $100,000, at that point in time, we'd only been trading down, in the downward direction for 18 days, down 12%. But now we are only down 22% over 39 days. Remember, this correction over here was 180 days, and this correction was 32% deep. This was an example of a correction taking place predominantly in space. This was an example of a correction predominantly taking place in time. Bitcoin can correct one of two ways, but no matter which way you slice it, if this is a major market correction, it is not big enough to fit that criteria yet. The only reason that we said $100,000 might hold was because of the mythos of Bitcoin is above $100,000. The issue is, over the last few hours, which is why I waited to make this video, I wanted to see how Bitcoin would progress. Over the last few hours, that mythos has been broken. You can see the first time that we fell below $100,000 back here on the 4th of November, Bitcoin did not even close an hourly candlestick below that level. Here on the 7th of November, that Friday, Bitcoin only briefly closed one hourly candlestick below that level, and then we managed to rally back up to 106,000. Over the course of today, we have seen Bitcoin trend downward for 6 hours straight, and we have not only closed the bottom of a candlestick below 100,000, we've actually printed entire candlesticks, almost 3 of them, completely below $100,000. That is a volumetrically confirmed breakout below $100,000, much stronger than anything that we have ever seen on Bitcoin. The last time that we saw this much volume was here, and we bounced, so this was a sign that Bitcoin was holding firm. At this point in time, since we have broken, this volume is a confirmation that 100,000 is broken, and it means that we should not be getting too excited about the possibility of Bitcoin rallying back up above $100,000 anytime in the next couple of days. In other words, it's probably going to take a little bit longer. But why would it take longer, and where would Bitcoin need to go to? Well, if you'll remember, we love Fibonacci's on this channel because the market loves Fibonacci's. When the market traded sideways on this giant bull flag back here in 2024, we saw Bitcoin only drop down to the 0.382. We've already dropped below the 0.382, so we don't need to worry about Bitcoin doing this kind of thing. But what we do, what there is a possibility that Bitcoin is doing is it is imitating this most recent correction back over here. Bitcoin got a large number of bounces at the 0.5, briefly wicked down to the 0.618, and then went into an uptrend. What we're doing right now might actually be the exact same thing. It's possible, therefore, that Bitcoin came down to the 0.5, which is at exactly $100,000. The rally started 25,000 below 100K, ended 25,000 above 100K, right? So it's very possible that we're doing the exact same formation where Bitcoin bounces around on the 0.5, wicks down to 0.618 for a few days, and then bounces. And quite frankly, this is the most bullish scenario right now. Let's just go ahead and draw this on a perfectly clean chart so I can show you the similarities here. Bitcoin back here on this last correction, dropped back down to 0.5, wicked down to 0.618, and then rallied. It's very possible, therefore, that we're doing the exact same thing. Bitcoin drops down to 0.5, wicks down to 0.618, and then rallies. Remember, 0.618 is sitting here at $94,000. And part of the reason why this might happen is because our trend line that we've been talking about, as I showed you earlier, for the last month, gives us a price target of give or take $94,000. Now, we might wick below it a couple $1,000s briefly, but in general, the zone somewhere around $94,000 makes a lot of sense. Now, from the other perspective, we've got to look at the CME futures gaps. CME futures gaps show us that Bitcoin very well may need to drop slightly lower than that, possibly as low as $91,000, because when we went through this major rally, we moonshot partially through the weekend, established a large CME futures gap that nobody was convinced was going to fill back at the time, but it did, and Bitcoin dropped back down to $75,000 to the 0.618 as we just discussed, and also to fill the CME futures gap, and that gave the bulls enough confidence to say, okay, let's buy on with the bull market. It is very possible, in fact, it is our prediction, and it is very probable that Bitcoin is going to do the exact same thing that it did in this cycle, where Bitcoin will drop back down, fill the CME futures gap, drop back down to 0.618, which, as you can see, sits just slightly above the CME futures gap. So we'll have to go a little bit below it, which is one of the things is leading me to the conclusion that this is probably going to happen pretty quickly, as in maybe within the next 7 days. In other words, within the next 7 days, Bitcoin will probably fill the CME futures gap. From that point in time, that really is the decision point. If Bitcoin fills the CME futures gap and proceeds to start going lower, like down here to the 0.786 at 85,000, that is going to blow up a few $1 billion worth of long liquidations, which you can see right over here. There are an enormous amount of long liquidations at $88,000 to $92,000, and if these get blown up, it is very possible that that would be a long squeeze from which the Bitcoin bull market could not recover. In other words, I want to make myself very clear here. Bitcoin is most likely going to drop down to $94,000 relatively soon, and it will probably also wick down to $91,000 to $92,000 to fill the CME futures gap. At that point in time, the entire fate of 2026 is being decided. If Bitcoin does not manage to set a bottom after filling the CME futures gap, then there is a very high probability that Bitcoin would end up going into a bear market in 2026. That bear market is one that we have discussed at length on this channel, but it would be prudent for us to give that a bit of a recap. If we were to see a bear market in 2026, our prediction is that it would look a little something like this. That would, of course, begin with a break below the bull market support uptrend, and then we would most likely end up dropping back down to the 0.618 Fibonacci level of the entire bull market thus far, and that would sit at $57,000. That would, at worst case scenario, be, of course, because this is the way Fibonacci works, a little shy of a 61% correction. It'd be about a 51% correction. On top of that, you've also had the 0.5 here that intersects very nicely with $75,000, and then you also have the high at $65,000. So in general, there is a large amount of confluence that if we did go into a bear market, that bear market would probably end somewhere between $57,000 to $75,000, likely sometime in the second half of next year. So if we go into a bear market, it probably looks something like this. Around midterms, you start rallying. 2027 ends up being extremely bullish. Late 2027, early 2028, you may see Bitcoin moving up towards a couple $100,000 per coin. That would be my worst case scenario, and many of the insiders that we talk to in the cryptocurrency space are indeed forecasting a mini bear market, which is what many of them are calling it, which could drop us as low as the northern side of that price target, which is 75,000, and then a recovery. Most people in the industry are forecasting a correction down to at least 94 to 100, which is part of the reason that we've been making that call for the last month. We have all kinds of insiders that we talk to all the time. Most of them have forecasted that as well behind the scenes. They're not necessarily saying that publicly, but that's what they're preparing for. But the good news is many of the insiders that we talk to are also forecasting a relatively bullish Q1 of 2026. Worst case scenario, they push that back to Q2. And so many people on the inside are anticipating that this correction is not done yet, but that the bottom is somewhat close and that a massive 70 to 80% bear market is unlikely. Now, I also want to look at this from a slightly different angle, and that is that every time Bitcoin needs to come back down to test this uptrending level of support, it typically backtests onto that uptrending level of support. But to do so, it follows a downtrend like this. Where you see the intersection of this correction downtrend and the bull market support uptrend is where the bottom is found. This is the exact same thing that happened here in April of this year when Bitcoin dropped all the way down to $75,000 per coin. We followed the downtrend, and at the intersection, that was the exact bottom. And that intersection also, as we talked about, happened to line up with 0.618. It was a beautiful confluence. And by the way, it was the previous all-time high at 75. So it was a beautiful confluence. Now, Bitcoin dropping below 109,000 is not surprising because Bitcoin didn't go up to like 150. If Bitcoin went up to like 150, then it probably would have bounced off of 109. That said, that's not what we're seeing. It is very probable that Bitcoin was going to drop below 109 because the new all-time high just wasn't as high as it needed to be. But nevertheless, there is a downtrend similar to the one I just discussed that is guiding this not bear market, but this correction right now. And it is governed by these two corrections. And as you can see, the intersection point between that long-term uptrend and the downtrend that is governing our current market is sitting at exactly 94,000. Now, you could also possibly say that this is the downtrend, and in that case, it's sitting right there at 95,600. But in general, somewhere in the low 90s is where the vast majority of confluences are on Bitcoin. And when you look at this confluence between this downtrend and this uptrend, it is interesting to note that just the same way that that intersection sits at 0.618, that's the exact same thing that happened during the last bull market, the last bull cycle, right? The overcross of these two lines sits exactly at 0.618. So, all in all, I am not suspecting that we have confirmed a bear market. I believe Bitcoin needs to start sustaining corrections below $90,000 before we can confidently call a bear market. Because ultimately, we're only down 22%. Earlier this year alone, Bitcoin dropped 32%. Okay? But if Bitcoin starts breaking above that and dropping down below 90, and we're talking 30+% correction, at that point in time, you probably would be looking at a bear market. As we said, worst case scenario we expect would be $57,000 to $75,000 in sometime in half two of next year. That'd be the second half of next year, bottoming out, leading to a bullish 2027. So, what am I doing? I am de-risking. I am in cash. I am forecasting Bitcoin to drop lower, and I am looking for dip buys on our investment account. As I told you, during the last major bottom, here around $75,000, we deployed right on this leg over $180,000 into the market. And I'm very happy with that. So what I'm looking for is for Bitcoin to drop down here to 94, give me a little bit of a confidence that we're going to hold, and we will start deploying capital at this range again. And if we go lower, we will continue to deploy capital as the market drops. And so I would highly encourage you guys to have a plan for the possibility of a bear market. I have said for a very long time that I believe the 4-year halving cycle is dead, but the but is very important, but we do not have technical confirmation of that yet. So we need to, at all points, be prepared for a bear market. One of the last things I want to mention here is that the way that you find peace in life is by bringing your actions into alignment with correct principles. And one correct principle is that you should set up your investment and your trading portfolio in such a way that you don't have to bring the negative emotions home. A lot of you guys right now are probably in a position where you are overextended and you're likely to get wrecked. If you cannot go home and to the best of your ability, turn off the emotions about, oh my gosh, Bitcoin is below 98,000, it is possible that that is a sign that you're overexposed to the market, that your liquidation levels are too high, or your position sizing is too great and you have too much invested in the market, or you have too much debt, or you don't have enough savings, or that something is out of whack. I highly encourage you to take this time that you're feeling pain in the market to evaluate your position, evaluate your principles, see if your principles are correct, and if they are, ensure that your position is in alignment with your principles. Bitcoin dropping $6,000 over the last 12 hours, we have lost just a couple risk factors trying to buy the bottom. That's it. Our investment account is totally safe. Our family is totally safe, and you need to make sure that yours is too. Because ultimately, the reason that we build an investment portfolio, the reason that we build a trading account, is so that we can provide peace, prosperity, and security to those around us. So, if you are overexposed, I highly encourage you to focus heavily on risk management and risk mitigation right now. The market will probably trend lower, and if it does, I want you not only to be in a position where you're not pulling your hair out, freaking out, having a panic attack, but I also want you to be in a position where you are able to take advantage of those lows. That's my 2 cents. So, where's Bitcoin going? Probably going lower. We bottomed out at $98,000 earlier. That is a dead cat bounce if ever I've seen one. I have no confidence that Bitcoin is going to be able to hold here. After it sliced right through $100,000 like butter, we decided to stop trying to find a bottom. We just said, you know, we're going to sit out of the trading game. Bitcoin does not have any technical structure to trade right now. And that's what we're going to be doing for the foreseeable future. Listen, if you guys do think that you can make some trades successful here, you definitely can, but you have to be very careful. If you want to learn how to trade Bitcoin and cryptocurrencies, I highly encourage you to invest in your education on that, which is why we are working on a free trading course that will help you to understand where to put your entries, how to standardize risk, how to make sure that you are safe when you are trading, and you're going to be able to get access to that free trading course if you sign up for Femex and deposit $100. Femex is a fantastic platform that has kept people safe all the way throughout this correction ever since October the 6th. And I firmly believe that it is a phenomenal platform for you to begin doing your trading. So if you sign up for Femex and deposit $100, you'll be getting access to that trading course when it comes out. So big shout out to Femex. If you haven't already, make sure to sign up with the link in the description box down below. I really appreciate all of you guys being here. Make sure to stay safe. And before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.